just so you're aware. Accumulated depreciation is a contra asset account. It's a negative asset. So it's going to have a native credit balance. So by crediting accumulated depreciation, and I'm going to write here contra asset, by crediting it, I'm going to increase it and decrease the asset. So crediting accumulated depreciation increases accumulated depreciation, and accumulated depreciation, remember, offsets the asset on the financial statements. You'll see this in a little while. Next is supply inventory. Right now, I have $1,200 in my supplies account right here. See, supply inventory, $1,200. Well, I went and looked in the closet to see how much supplies are there. It's only $500 worth of doggy treats remaining. So that would mean, how much supplies did I use up? How much supplies did I use up? I had 1,200. I only have 500 left. So how much did I use up? Yeah, you used up 1,200 minus 500 equals 700 worth of supplies. This is the other thing that everybody gets wrong. Well, they got this wrong also. A common mistake here is not to label the names of the accounts. You must include the word expense here when you say insurance expense, and you must use the word prepaid insurance. Prepaid is really important. If you just write expense, I don't know what kind of, whether you're talking about, if you just write insurance, I don't know if you're talking expense or prepaid. So you must indicate if it's an expense or if it's prepaid. Very common mistake. Another common mistake is just miscalculating this. Okay, so they used up $700 worth of supplies. Therefore, how do I take $700 out of this supplies account? Right now there's $1,200 there. Supplies is an asset. It has a debit balance. How do I take $700 out of it? By crediting supply expense for $700. That's an expense. I'm sorry. Credit supply. That would be completely wrong. Credit supply inventory, an asset going down by 700. The debit here would be to supply expense, also for 700. And again, you must specify here expense or inventory. Otherwise, I don't know which one you're talking about. You will get it wrong if you don't specify. So again, crediting supply inventory and this asset, this debit credit thing, you really got to get it down. So take the time. What I think I'm going to do is, if you want to do the activities later on in this chapter, I think they start with activity, well, 91 is a good idea. Oh no, 90, yeah. 91 is a good idea. And then I have a massive problem here, which you can use to study, which starts which is in activities 94 and 95. So what I can do with that is I can post a solution. Maybe not as a video, I might just post a solution in a PDF format for you. So these are your adjusting journal entries, but you definitely want to get more practice doing these. Let me just see if I'm supposed to be doing it. 1 second here. Oh yeah, we're gonna do more. We'll do more adjusting journal entries a little later in the class. Next thing to do now is to post. So what you do is you take each of these adjusting journal entries and you post them to your general ledger. Let's go through them. The first one here was the debit depreciation expense for $300. So go back to depreciation expense, VAT account here. And debit depreciation expense for $300. I'm going to write here in parentheses A1 for adjustments, $300. The credit, if you remember, went to accumulated depreciation. So I go over here to accumulated depreciation and I credit it for A1. Then the next entry, if you remember, was the debit insurance expense for $200. So I go over here to insurance expense. This is A2, and I debited for $200. Then I go to prepaid insurance, the asset, wherever it is. Here it is. And I credit that for $200. Then I had supply expense, which I debited for $700. So where's the supply expense? Right over here. So A3, $700. And then I credit supply inventory for $700. And that's posting. That would be step 5. Posting your adjusting journal entries. And now let's look at one thing here. Let's look at supplies inventory and let's look at the totals. Supply inventory, you can see here, I had a debit of $1,200 and a credit of $700. So that would net together to a balance of $500. Now, how much supplies inventory did we say we had in stock? 500, isn't that perfect? And let's look at prepaid insurance for a minute. I debited it for $2,400, and then I credited for $200. So that leaves me with $2,200 left as a balance. And again, that's really nice because that is how many months of prepaid insurance were left? There's 11 months left in the policy, right? And what's the cost of insurance per month? $200. So 11 months at $200 each means we have $2,200 worth of prepaid insurance left. Isn't that nice? It works out beautifully. The next thing to do now is to prepare an adjusted trial balance. We copy all the numbers from the totals from the general ledger into the adjusted trial balance. This is step 6. So supply inventory, we determine now has a value of $500 in the debits. And fill in each of these. All right, so to fill these in, we have equipment of $18,000, and we have accumulated depreciation that we just recorded of $300, prepaid insurance of $2,200, accounts payable is $1,200 because we didn't yet pay for those supplies, 0 rent payable, 0 wages payable. Now we have common stock of $30,000. Again, I'm getting all of these from the T accounts. Here you go, I'm just not flipping back and forth. Common stock, $30,000 right over here. Retained earnings so far is 0. We'll be doing retained earnings in a few minutes. Dividends, we paid a dividend of $400. The balance in revenues is $20,000. Put this over here so I can actually see what I'm doing. Depreciation expense was $300. Insurance expense is $200. Rent expense $1,500. Supply expense $700, and wage expense is $2,000. And then if you add up all your credits, you should get $51,500. If provided you get the depreciation number right, $300. And it balances. Now, when you're working on this and it doesn't balance, and if it happens that it doesn't balance, I'm not wishing that on anyone, of course, but if it happens that it doesn't balance, then you have to go back and check your work and make sure you posted every amount. You didn't do a debit as a credit or a credit as a debit. You posted the right amount, you posted it to the right accounts, and so on. And chances are, if you do it that way, then you go back and check your work, then you'll find the mistake. So the nice thing about this debit credit system is that it will help you catch any mistakes that you make, or catch if you make a mistake, and then you can go back and figure out what happened.